To build anything that truly lasts, it takes time.
What I want to ask you, largely very mixed, but if you ignore the kind of ad expenses or marketing expenses that have weighed on the bottom line and take a look at segmental performance, it's been rather strong, is something I would say for Elara. Do you concur, given the way that you have reiterated your bullishness and also hiked the target price for the stock?
Hi, good morning. So I think from Zomato, the performance has been quite steady as far as numbers are concerned. It's a mild beat on the quick commerce business. The food business is largely in line with expectations. I think profitability there has been slightly below our estimates. The losses in the quick commerce is stable on a Q-on-Q basis. Now, this is a very big positive sign. In the last 3 to 4 quarters, we have seen losses in quick commerce increasing consistently because of price war, because of increased competitive intensity, and investments in marketing and other initiatives. So I think clearly there's a trend here that quick commerce, the worst is behind us as far as profitability and losses is concerned. And over the medium to long term perspective, you will see break-even point coming back again for Blinkit, what was about 4 quarters ago, and also profitability, over the medium to long term perspective. So I think net it's a good set of results, good execution on profitability on the quick commerce side. Despite increased competition, they've been able to maintain their market share. Very interesting on the food business. Now the focus moves back to growth. Earlier, the focus was more on profitability over growth. But, and a kind of guidance of more than 20% growth in the food business over the medium term in FY27 and beyond increases the confidence for food business growth prospects as well, which was quite muted until about 2-3 quarters back, when the growth rates were trending in the range of 15% GOV for the food business. So I think 3 things to watch out here. One is, of course, the food business growth acceleration. Second, of course, would be in terms of the Q-com losses bottoming out or not increasing from here on. And third would be the improvement in margins should also come because of this inventory move model from 3P to 1P in the QC business.
Right. Karan, hi, morning. Let's pick up each segment in detail. And let's first talk about Zomato. Given that the GOV has pretty much sustained around the 16 and a quarter levels for some more quarters, where do you think it can accelerate to? What is it that you're penciling in terms of a GOV growth for this segment?
If you look at the GOV growth for FY26, rather, we do see acceleration going ahead because Q1 is not as strong as a quarter in terms of seasonality as well. So I think the GOV growth could end more towards 17-18% in FY26. That's the number as of now. And in FY27 and beyond, we are penciling in about 22% kind of GOV growth, which is around 20% NOV growth, what the management has guided for. They've guided for about 20%, but we're taking 20% as of now. So putting that into perspective, you will see acceleration in the food business. Now, what's driving this is, of course, one, increased customer base. If you look at Zomato in terms of the food business, because the competitive intensity had come off, both Zomato and Swiggy were aggressively chasing frequency and driving more frequency because of loyalty programs. I think now the focus is also moving towards customer growth, moving towards newer markets, and also innovation in the food business. So there are a lot of propositions where the food delivery is happening within 10 minutes. There's the bistro proposition as well within the food business. So I think putting all these things in perspective, because of innovation, because of higher customer penetration, because of increased market exposure, you will see food business reporting good growth in the medium to long-term perspective.
All right, but Karan, with respect to the Blinkit as well, it's been a great set overall, and despite the fact that the company has been expanding their dark stores, their margins and the EBITDA losses seems to be improving rather. Help us understand that what are you exactly penciling in when it comes to Blinkit, the kind of growth that the management is looking forward to, and what exactly are they doing right?
So Blinkit, I think in terms of numbers, we have taken a growth of about 120% odd for the entire year. And this is largely driven by store expansion. So if you look at Blinkit in terms of business proposition growth drivers versus the food business, is quite different. Zomato as a food business is seeing customer growth with a mix of AOV and frequency growth. But Blinkit rather is seeing growth led by new stores and led by new customer. I mean, 90 to 25% of the Blinkit's growth is led by new customer addition and new transacting users. Whereas AOV remains to be flattish, frequency also is largely flattish. So I think Blinkit continues to do well versus other peers is because they're focusing on the remote. I think the remotes are threefold. One is, of course, the assortments. Second is the consumer experience. And third is, of course, the best lead times that they offer too. And they're also present in better markets. They have first mover advantage in the northern markets where the players are not able to replicate offerings of Blinkit and not able to gain market share at the cost of Blinkit rather. So I think these are things which are working in their favor. They will continue to do well on that front. They have also raised their guidance for Blinkit in terms of stores. They have 2,000 stores is what they want to add towards December. That is maintained, but they've also raised the guidance to adding 3,000 odd stores, the total number to take to about the next 2 to 3 years, next 2 years rather. So that just goes to show the confidence quick commerce business has as a proposition. And they've also given a lot of confidence in terms of QCom scaling up in the non-metro markets. And that's a very big win-win because until about 6 months back, we all had a reservation. We all had a negative impact in terms of how will QC scale up in non-metro, whether or not there'll be a demand of QC in non-metro, whether or not they can achieve unit economics, profitability, and so on and so forth. So I think things are improving on that front as well. There's a clear focus to move to non-metro markets, and AOV non-metro markets is about 10 to 15% lower as compared to metro markets as of now, as per their commentary. So very clearly, all signs are signaling quite good traction in the quick commerce business, both in terms of store addition growth and in terms of better profitability.
So Karan, would you revise your price targets at all, given that the stock has been stuck in a very wide range for quite a time?
So our price target has been revised upwards from 300 rupees to 340. Primarily, the reason for this is two. One is, of course, the better growth in the food delivery business, which will lead to better valuations for the food business on an overall basis. Second reason is a mild better growth in the QC business because of better store addition and because of the non-metro market picking up. Third is, of course, the profitability in the QC business. So we see profitability in the QC business coming back on track. And basis that, there's a re-rating in terms of valuation multiple of the QC business. So if you look at the QC business, until about 6 to 8 months back when we saw this entire threat of new entrants, Amazon, Flipkart coming to the fore, JioMart getting aggressive, the quick commerce business actually went through a lot of de-rating in terms of valuation multiples. Zepto went into a price war. So I think all these things are now starting to cool off. The worst is behind us as far as competition is concerned. The worst is also behind us in terms of price war from Zepto. So basis that I think QC business will see a re-rating in terms of valuation multiple, which will also drive share price performance. So basis all these parameters, we have graded our target price to 340 for return.
Right, and Karan, also before we let you go, just one last question on profitability. Last time, in last quarter's con call, the management had very clearly stated that the focus is going to be on growth versus profitability, and we've seen that pan out this quarter with profit only at 25 crore. Where do you see the profit trajectory going? Because they seem to have bottomed out for Blinkit, but what about the overall business?
So from a overall business perspective as well, if you look at the events business, they have, kind of given good visibility over there also in terms of profitability. They've given a guidance of reaching almost about $3 billion GOV in that going out business in the next 3 to 5 years. They've also given a good guidance in terms of getting $150 million positive EBITDA in the going out business. So I think all these things will, work in their favor. Others business, which is the bistro business largely, could see concerns in the near term because of losses. But on overall basis, profitability is not something which would be a focus right now because, as I said, quick commerce has got a very big opportunity. It's now the time to, kind of gain market share, maintain market share, and, kind of do well versus competition, focus on your moat. Profitability will eventually kick in the quick commerce business because there are more levers for QC as compared to food business. Herein, you can have much premium take rates as compared to what you have in the food business. You can have better advertising revenue as what you have in the food business. And also you can raise platform fee, delivery fee once the business reaches a respectable scale. So I think profitability should not be a focus as far as QC is concerned. It's all about going for a break-even path and mild profitability in the near to medium term. But yes, the larger delta in terms of profitability will come for QC. In fact, the margins for QC business can actually be higher if you look at a 5 to 7 year perspective versus the food business. So that's the kind of confidence we have on QC as of now.
Okay, Karan, great to have you on the show. Thanks as always for your time.
Thank you.
Well, 340, that's the revised price target coming in from the house of Elara on Eternal. Currently, stock hovering around that 270, 275 odd point band. But